We are getting a hot headline from the Bloomberg Terminal. Bank of Japan sets policy rate in a range between 0 to 10 basis points, so a big move. And scrapping the yield curve control program. So the sources at the Nikkei seem to be well placed. Martin, what reaction might you have to what we're learning now?
This is what we were expecting, so we got kind of glad that it actually happened and we didn't get a kind of shock. Oh, no, they are not doing anything. They chose a perfect timing, more or less. So this seems to be quite welcome by markets who have been tested before. So let's see how Japan is now working with the normalization.
We're not actually seeing a huge change in dollar yen. We're moving at the moment 149.50 or so that's pretty steady. And also in terms of the Nikkei, we have been on the lunch break. So very interesting to see how those things move. We're getting these flashes now every couple of seconds. We have David Ingles, one of our market correspondents and also an anchor on Bloomberg Television with us in the studios. David, your early thoughts on what we're seeing in markets?
Well, it's a counterintuitive move we're seeing in the yen. We're weaker, in fact, here, 0.3%. And this is, to your point, Brian, we're moving really on the second here. A couple of other headlines coming through. So we know most of these because of all the leaks that have taken place, right? So they've scrapped yield curve control. They've raised rates for the first time since 2007. They've tweaked their asset purchases as well. Nothing so far. I could be mistaken. I'm still here. They've also ended buying ETFs. Now, just taking a step back, right? So I was having a look at some market measures going into this meeting today, and what really caught my eye were yen 10-year swaps. And you look at how behaved that gauge has been. In fact, that was really bid up substantially in previous meetings on the back of expectations of what we did get right now. That's actually remained in range. In fact, the spread, and this is going to sound like Greek, but I'll explain it in a bit, the spread between the 10-year swap and the 10-year yield is actually now back to the narrowest since the Fed started raising interest rates in 2022, which tells me the market was expecting this. That's number one. And number two, it looks like for now, the BOJ is done, right? We'll have a separate conversation on whether or not they need a second rate hike, but for now, it seems like they've done what they needed to do.
Interesting, yeah.
And bond buying will continue. We're getting a hot headline that the BOJ will continue buying JGBs with broadly the same amount as before. What is missing here is obviously a target in the yield curve here. I mean, so are they going to be much more clandestine in moving in the marketplace? Are they going to be less transparent? What do you think, Ed?
I think, again, no one's surprised by this news. Dollar yen's not moving anywhere because on purpose, we were all told what was going to happen. No, I think they're going to favor a managed information process where they don't want to shock the market. In a way, they've achieved exactly what they wanted here. Dollar yen, actually, nothing's changed. They're getting out of buying ETFs because that's a long-term problem for them, how to unwind the ETF purchases. You can always buy more bonds, and I remember having this conversation with guys on the BOJ 10 years ago. They can hold a bond until it runs out. Disposing of an ETF is a different issue altogether. And I believe this indicates some level of confidence, by the way, that consumers are returning to buying equities and they don't have to engage in that behavior any further.
It is interesting that the vote was not unanimous. It was 7-2 to scrap the negative interest rate. That's closer than what some people expected. Martin, can we read anything into that, or is that something that you'd figure on a move as big as this that there might be a little dissent?
Not really. I mean, there are people who are just looking at the economy, and the economy has been slowing. So if you would be just looking and, reading the data, looking only in your domestic economy, then there is a good reason to keep policy more expansionary, not to increase interest rates. On the other hand, the Bank of Japan has been driven, and the government has recognized that as well, by the very weak yen. So this is an important variable that you don't have to take, but it affects policy. Plus, by sentiment overall that, the economy is normalizing, the policy should be normalized as well. This is the overwhelming mood around, people in industry and also in the Bank of Japan.
You know, Ed made an interesting point, David Ingles, about the effect that the equity market is having maybe on the investment community in Japan, and I'm wondering if you can imagine how that may have impacted the thinking at the BOJ when you're looking at a Nikkei that's not far from an all-time high.
Interesting question. In fact, this came up about 2 hours back on the TV show. Man Group was on, and certainly to your point, at this point in the rally, 40,000, right? What exposure does one want in the Japanese equity market? And interesting point from our guest is the BOJ and what they're doing now. You could look at that as simply a symptom of the underlying change that's taking place in the economy, right? And two things there, right? One is the economy is normalizing, right? So they entered this ultra-aggressive policy stance, I think 13 years ago. I just joined Bloomberg then, and that was when Kuroda was coming in. April, of course, 2013, that's when they embarked in this. And, 11 years after that, they've managed to achieve 2% inflation, right? And they're coming out with, in fact, guidance on inflation. They're just saying will likely remain above 2% through fiscal 2024. But here's the interesting part, too. They've also downgraded their assessment on consumer spending and production. So job done, but job done not just yet. So the point I'm trying to make is what exposure does one want from Man Group? They think it's time to go to small caps because that's the part of the equity market that might not be as exposed to a stronger yen in case the yen strengthens from here.
So the yen hasn't really moved all that much. At the moment, trading at 149.84, so it's actually weakened a little here. And that's a pattern that we've seen. Nikkei had been lower, but now is higher, moving up around about 95 points or so, a quarter of 1%. Let me go back to Ed Rogers. In terms of looking at the equity market, that question that David was addressing earlier about whether or not it's getting close to being tapped out, I think you were one of the first ones who told me that in looking at Japanese companies, they're sort of like a warrant on global growth. Do you think that the gains that we've seen in the Nikkei are signaling a little bit that global growth is coming back?
I think there's optimism, yes, and definitely that small mid-cap space in Japan has, in many ways, been a harbinger, foreshadowing of a global. It's a play on the global economy. In many respects, I'll still stand by those statements. The kind of leveraged, if you will, exposure you can get in that space for certain parts of the global economy are absolutely real, and the differentiation that we're going to now see in that space is also, I think, going to be real. Some of those companies that won't have access to cheap capital or free money anymore, it's going to have impact on their businesses. In addition to other things, lack of labor and other things, you can talk about a lot of things. But by and large, yes, I'd still stand by those statements.
Ed Rogers is the CEO, also CIO of Rogers Investment Advisors, joining us as we continue our special coverage of the BOJ decision with the Bank of Japan hiking interest rates, a target range tonight between 0 and 10 basis points. The BOJ also ending yield curve control. The last country, essentially, to exit negative interest rates, joined by Bloomberg's Brian Curtis, co-host of Daybreak Asia. David Ingles is with us, host of one of the Bloomberg TV shows in Hong Kong. And Martin Schulz is with us, chief economist at Fujitsu. Martin, we were talking a moment ago about the drag that the Chinese economy, the weak Chinese economy, is having on Japan. Recently there's been a little bit of conversation about the parallels between what China may be facing now in deflation and what Japan has been struggling with for what seems like 3 decades now. Do you think policymakers in Beijing have really looked at the mistakes that Japan may have made over the last 30 years and are learning from them?
Absolutely. I mean, the Japanese, how to deal with a real estate or financial bubble has been one of the main cases in any textbook. The Chinese government is very well aware that their growth model, with a huge amount of investment into infrastructure investment in particular, has been driving the economy, and this needs to change towards more consumer spending, towards a more domestic driven economy that is focusing on technology, on digital technologies. This is what they've been focusing on. They have been studying the Japanese case very, very well. The problem is it remains to be hard. Such a change is really a significant problem. China knows it will have to expand, well, its exports somehow, which will have to go into Asia. We should expect to see this in the future, and that they have to deal with their, well, more technology-driven companies that have been growing so much. This is why the policymakers are probably so very careful with their technology giants. They are not sure. They know that they have to rely on them, but they are not sure if they can control them. Figuring out the right way forward here will be a major, major challenge for policymakers in China over the next few years.
David, something we touched on a little bit earlier in this hour when we were waiting on the BOJ announcement, we were sort of musing over what might happen with the holdings, the existing holdings of ETFs and REITs. Now, we see today that they have scrapped the purchases of these, and we understand they haven't actually been buying all that much of late, but they still have those large holdings. We put it to the other guests what might happen. Do you think that it's sizable enough that it could weigh on the levels of the equity market in Japan if they start to sell now, and would they?
Good question. If I had the answer, I'd be sitting on a sunny beach somewhere else with a very expensive cocktail.
We can't get inside their minds, can we?
The interesting thing, though, is the vote on the purchases, right? So it seems that the vote on policy is what was 7-2 and operating,
yeah,
but it's 8-1 on JGBs.
Okay.
On the purchases as well, so that you have a slightly larger majority there, if you will. On ETFs, I mean, you have an incremental buyer now, right? You know, I haven't done the math, but you do have an incremental buyer outside of BOJ at the moment, and I'd still be interested to see what they'll do with all the JGBs on their balance sheet, right? I mean, they can hold that for a very,
wouldn't
very
it be
long
interesting if they set up a scheme just like the Fed in QT when they finally decide to dispose of a lot of what they've bought, that it just becomes kind of like machine-like?
Yeah, and shrinking the balance sheet, right?
Yeah, yeah.
And that's a good point, because the Fed is tomorrow, and something else that came up on shows today. You look at what's happening in the U.S. equity market. You look at risk assets. You look at crypto. You look at where copper is 11-month highs. You look at oil at 4-month highs. S&P. It doesn't seem that what the Fed's telling us is true. You know, the Fed's been saying policy's restrictive enough. You look at markets, it looks like there's enough liquidity out there.
Yeah, I would agree with that. Martin, I know that you've been with us for much of the hour, and I want to thank you, Martin Schulz, Chief Economist at Fujitsu, for joining us on our special coverage of the decision from the Bank of Japan. Ed Rogers of Rogers Investment Advisors, stay with us. I'm looking at the WEI function now in the Bloomberg terminal. We're seeing a weaker Nikkei, down only 0.2%, and the yen pulling in to 149.65 thereabouts, with a loss against the greenback of about 0.3%. But if you look inside the Nikkei right now, anything that's interest rate sensitive, real estate, utilities, financial shares pushing to the upside, seeing a little bit of weakness in healthcare and consumer discretionary. David, you were making a point earlier about the relative strength of the Nikkei, and I'm wondering whether or not we should kind of read into that maybe at the margins had something to do with the decision today on the Bank of Japan.
Well, most likely, in fact, the Nikkei, and also when they look at the banks index, right? Because the Topics Bank Index has really been a BOJ trade. That's actually up right now. I'm getting more details on the statement, and you know what? This is actually looking, and I could be wrong, and the next few hours could prove me wrong. We'll see what they say in the press briefing. But the headlines that are coming through right now are tilting this narrative more in favor of this being actually a dovish move, right? So fine, first rate hike since 2007, and notwithstanding, it's just barely above zero. But the BOJ is coming out and saying that they can increase JGB buying if rates rise rapidly. So it's looking like they'll be there to keep rates steady.
Well, yeah, that's what we thought was the case, because if you scrap everything, you might have yields running to the upside. So when I saw that Nikkei story that they would continue with government bond purchases but scrap YCC, it gives them more control in the market. It gives them the freedom to get in there and buy, when and where they see, and they can guide the yield to a level that they feel comfortable with. And we were speculating, what would that level be? Would it be 1%? Would it be 1.5%? Let's go back to Ed Rogers. Ed, anything that you've been seeing here in some of the latest flashes that catch your attention that might show that the market is somehow in or out of favor with what the BOJ would like to see?
So I got the same WEI open. I got the same BTMM. Yeah. Interest rates aren't really moving.
Bouncing around a little bit, from plus to minus.
But this is such a non-event, because we've all been predicting it for a while, and they told us what the trigger was going to be. Like when you saw the conclusion of the wage hike,
right?
It was kind of obvious. Now we're there. What the other thing I'm watching on Bloomberg is, Evergrande loses $78 billion. It's 8 times the accounting fraud of, the Enrons and the WorldComs. And I think we should be thinking a lot more about what a potential China implosion looks like vis-a-vis Japan.
Wow.
And vis-a-vis everybody else, by the way, too, because there is, if you go back to the late 80s and the early 90s when Japan's trouble started, there were a lot of people that would tell you, yeah, well, there's one set of books and another set of books and not a whole lot of good disclosure going on at the national level. Japan's a really good, clean, easy place to do business now, for the most part, as is the United States, again, for the most part. I think China is a real question, and I think we've touched on this a couple of times, but if you really want to think about ripple effects, I think that's where you start to think about where the next big ripple effects might be felt. And I agree with, I think Martin was saying, the Chinese have sort of been studying Japan for a long time about what happened with their real estate. It was a real estate-driven crisis, right?
Yep.
89?
Yep.
The peak was a real estate-driven crisis here. You look at 2008 in the United States, real estate crisis. So the impact of a real estate crisis on a large economy, I don't know if anybody's ever really done all the right studies about the level of political, social, and economic impact when it's something that big. And that's the Bloomberg screen I've been reading a lot of this morning.
No doubt about that.
It's already priced in.
Yeah.
It's already priced in. It's already priced in.
Well telegraphed, I think. Not surprising, but well telegraphed. Nick Smith is with us. He is Japan strategist at CLSA on the line. Nick, your reaction to this move by the BOJ to essentially do everything that the Nikkei said the BOJ would do?
Well, I've been warning of this for quite a while. I got the 3 hikes right last year and said that would be coming out of negative rates today. So exactly as forecast. The question is what you do with your equities from here on in. I mean, I've been very long of banks for quite a while and done extremely nicely out of them. The question is whether they underperform like they did after the first rate hike in 2006, or whether they keep going. I think that the BOJ hasn't finished this. I think there's a certain amount of contrition from the Bank of Japan that they have been waterboarding the economy for quite some time. And that's the speech of 7 December when they're saying, sorry, we crushed net interest income in the household sector, in the financial sector, and we certainly didn't help in the corporate sector because they don't have debt anymore. And so they were essentially saying, we messed up. We didn't expect it to go on for as long as that. We knew that the longer we do it, the more it hurts the economy. And therefore, they've been signaling for quite some time they'll get out of this. I think Nick, there's possibly more to come.
Nick, we were sort of musing at the beginning of this week, what would have the bigger impact on markets? Would it be the Bank of Japan call today? Would it be the NVIDIA Developers Conference or the Fed? Given that, we got a lot telegraphed from the BOJ through the Nikkei and through Kyoto on what might happen today, I'm just curious whether you think maybe what Jerome Powell says in the next 24 hours could be the most important.
Yeah, I mean, obviously, in terms of the currency, this is a relatively small impact. In fact, it's sending the currency in the wrong direction. Rates have gone up, and yet the currency's weakened. What's going to be important for the currency is clearly going to be the Fed, and the cuts we'd been expecting from the Fed. I think people are getting less and less confidence that they'll get the number and size of them that they'd thought some while ago. That's why we're staying weak. I mean, the main thing with the yen is it affects emotions. The effect on profits is nowhere close to what most people think it is.
Let's get back to Ed Rogers very quickly for the last time, Ed. If you had take a guess at what the Fed's going to do in terms of forecasting future rate cuts this year, are you in the 75 basis point in terms of total cuts this year, or are you leaning more toward 50?
My guess is it would be lower than 75 if you're going to put a gun to my head and make me pick. Again, I think it'll be a bit more gradualist because I think there's a lot more concern and uncertainty in that regard in the United States about what exactly impact will be and where to go.
David, let me put this question to you then about the environment. We've had earnings, and that has driven stock market gains in the U.S., and people have set aside macro policy a little bit. Now you've got the Fed coming in the next day, and we really are at the end of the earnings for this season. Do we start to fret a little bit more about rates and levels of inflation?
Well, let's see what the dots look like first, right? And let's see what the thinking there says. And I think that's a very good point. Let me rephrase that. Markets have done well despite the fact that we pushed back on rate hike expectations, right?
Yeah, exactly.
And the fact that...
And that's because of earnings. Earnings have been pretty solid.
Yes. And, the NVIDIA story overnight, just to crowbar that crowbar that in, right? So the issue for NVIDIA, if you had to pick one that's priced for perfection, was you have a company that pretty much has a monopoly on, a very narrow set of very wealthy and large big buyers, and demand seems insatiable, right? And the question there was that new chip, Blackwell, I think, was what the chip was called. Does that then widen enough the customer base for NVIDIA to justify the valuations? We put that question earlier on to one guest, and he said, "Yep, no problem. NVIDIA, I'd still buy NVIDIA." So, to answer your question, do you buy U.S. equity markets if NVIDIA keeps doing what it does, as it represents, of course, a narrow pool of other equities? Maybe that answers your question.
My feeling was I was tempted to think that the equity market could move sideways to down here because the focus would be more on the Fed and interest rates and inflation. That's a little stickier than what people had hoped for, say, a month ago. And that since you don't have earnings, you're not going to hear less about NVIDIA and AMD and some of these, and the nervousness might come back in. Just some final thoughts from you before we wrap up.
Yeah. I'd say watch China, right? If one is of the view that global equities will do well, you sell one hand to buy the other. India's done very well last year. A lot of fund flows are selling India and slowly coming back into China. How long that lasts, nobody knows. But I guess in some ways it's a zero-sum game, just looking at from that specific perspective.
Nick Smith, very quickly, Japan strategist at CLSA. What's your strategy on putting money to work in Japan, very quickly?
I think that what we're going to have from here on in is continued inflation with continued negative real rates, which means real estate companies could continue to do very well. We'll have a short period of outperformance for the banks, but they're a trade. Don't go falling in love with them. They're not quality, but mostly I'd be saying stick with high dividend yielders. That's the only way of getting a real return in a country where bonds are such big negative real returns.
So glad it worked out that you could join us, Nick. Don't be a stranger. We'll have to have you on the Daybreak Asia radio program in the near future. Nicholas Smith, Japan strategist at CLSA. Ed Rogers, as we wrap up, final thoughts?
Ultimately, I think this is a good thing, and this should be a positive signal for Japan, getting back to a more normal-ish interest rate environment and more normal tools, if you will, or responses, maybe is a better word, on the part of the BOJ is ultimately a sign of health, and this should be viewed as such. It's fairly robust. Japan looks pretty good right now, and this is, I think, more signs that things are looking good for Japan.
Ed, it's always a pleasure. Thank you so much for making the time to join our special coverage of the BOJ's policy decision. Ed Rogers, CEO, CIO at Rogers Investment Advisors. As the BOJ hikes rates for the first time since 2007, the policy rate now in a range of 0 to positive 10 basis points. We've been at negative 10 basis points, it seems like, for quite some time. And that will do it. I'm thanking David Ingles from the TV side at Bloomberg Television and Brian Curtis, co-host of Daybreak Asia in Hong Kong as well. This is Bloomberg.